Hello there. Good evening. Welcome to the Jim Bohannon Show from Westwood One Radio. We're at 1-866-50-JIMBO, 1-866-505-4626, online at jimbotalk.net. And great to have you with us on the program this evening. Well, April 15th. Oh, did he have to bring that up? Yes, we do. It's the tax deadline, with, of course, some exceptions, but we're always starting to get those envelopes, right? Important tax documents. Mm-hmm. Yeah, it's that time again to get all of your financial lame ducks in a row. Your employer, your bank, your investment firm, your mortgage holder. So you got to get together all the tatted receipts and all the paperwork, and either you or your professional preparer, which is, of course, the choice for more and more people, head to the appropriate 1040 form, hoping to do it right, because you do not want to run into the A word. Audit. I've actually been through one. We'll mention that in the course of our discussion tonight with certified public accountant and tax resolution specialist Joe Mastriano. Good to have you with us tonight, Joe.
Yes, glad to be here.
Yeah. I won't go into the specifics. Suffice it to say, it was at a time when I was helping out my mother, and it was basically paying for all of her expenses as she was entering into dementia, and she gradually went from people helping her out in her own home into a nursing home, and then finally she passed away. But in the process of all of this, the government at one point got upset with the precise manner in which I was helping her. It was a pain in the butt, and they wound up admitting they were wrong. But I'm still here, no visible scars. Your thoughts about audits? Would you not agree that they are not fatal in most cases?
Oh, they can be, because if you don't understand what the auditor is telling you, some people get scared and they think of what the auditor says, and that's got to be the law. That's got to be the tax code. But I've had my practice for over 30 years, and I know many auditors that will make up stuff as they go, hoping to bluff you. So it's unfortunate.
Auditors who will make up stuff as they go, hoping to bluff you into what? Blurting out a confession, like some kind of Mike Wallace interviewing technique?
Well, they do that too. Actually, in the beginning, I've had somebody try to trick my client into admitting he had cash at hand, and I had to stop him and say, "Look, asked and answered. How many different ways do you want to trick him?" I think he was up to number 5, trick him into admitting he had cash. And I had to tell him move on to another question. So, yes, that's true also. But, no, what they do is they tell you that your receipts and invoices and canceled checks are not good enough anymore to support your deductions. They'll actually tell you, we didn't think it was prudent for you to incur that level of an expense.
Well, now, just a moment here. First of all, to say that I have proof that, in fact, I made the donations, that's as far as their judgment goes. It's not up to them to determine what is or is not prudent for me. And it may not be prudent to say so, but the actual truth is it's none of their damn business whether they think what I did was prudent or not. It's my money. They are to deal with the laws and the regulations and not their view of what is prudent. Surely to hell, I don't know that anybody would really want to fight it out. But if you went to court over that, the IRS would lose so fast. That's nonsense.
Yes and no. I feel that way, too.
But that's not a feel. They do not have the purview to tell me what is or is not prudent. No, they have regulations and they have laws. No.
These guys can get away with a lot of stuff.
Well, not by the law. They cannot. If they are just usurping, if they're just taking away, there are law. The Internal Revenue Service exists based on statutes on the book.
Right, and which taxpayers have $20,000-$30,000?
Well, that's what I said. It may not be worth it. It may not be worth your while to fight it out. But anybody who did would win, because that's nonsense. You can't do that.
no, mostly. I'll agree with you mostly, but I'll tell you something.
Where does the law say that they have the right to decide what is prudent for me? That's not in the law.
Oh, you're still on prudent. I was moving on to other issues.
Well, all right, but I'm simply noting that that's not within their purview.
I agree with you on prudent, yes. I agree with you on prudent. But I can give you areas that they do make up. I've had appeals, and I've had appeals officers tell me on the Schedule C businesses trying to say it was a hobby. And it was clearly not a hobby. We had every bit of evidence and people signed witnesses as well as meeting the code and the regs. And basically I was told, sorry, we think our cases will win in court over yours. And they weren't even interested in the truth. All they were interested in was winning.
I do not argue for one moment that there are people who will try to abuse things. I'm really noting that this is an abuse. It's not within their purview. If they in fact do this, then they are pursuing an illegal course of action. And can they get away with it? Oh, maybe they can. I'm really noting that if you in fact actually had the resources and you wanted to wage it, and it might not even be worth it financially, but you would win. That ain't in the law. That's all I'm saying.
Most of the time, yes. Most of the time.
All right. Tell me what it is that exactly that you do at taxproblem.org.
That's correct. At my firm, Joe Mastriano, PC.
Right.
And I've even got Killer IRS as my official federal trademark. What I do and have been doing for many years is protect people from being audited. In the discussion of audits, we also do, we'll get on to installment agreements, and you'll be very surprised about that too. But with audits, what we do is protect people by documenting the returns and documenting that the taxpayer understands. Let me give you an example. It's very common in the media for people to get on and do news articles and say, oh, you want to avoid an audit. And I download all this stuff from other CPAs, and they're like, well, don't take excessive deductions in these areas. Don't take continuous losses on your Schedule C. Well, what do you want to do? Lie and say you had income? You know, put down the truth. And they scare you. Office and home deductions. They go across the board, and they say, oh, if you do this, the IRS is going to audit you. Well,
now, there are certain red flags, if I'm not mistaken. There are certain things that you can do, even if you're in the right, that will certainly push you in the direction of an audit. That was true at one point. For example, working out of your home and tax-deducting part of your home. You can be as legit as the day is long, but I am told, in days gone by, you can tell me if that's still true, that was a way to multiply tenfold your odds of being audited, even if you wind up exonerated.
Well, things have changed, and there was a time when word got out that if you did an office and home, it will increase your chances of being audited. But now, having a Schedule C increases your chances of being audited.
What exactly is on a Schedule C for those of us who are not enmeshed in this every single day?
It's a sole proprietorship, people who are self-employed.
Okay.
And they target self-employed schedules, because they don't trust taxpayers, a lot of taxpayers. You know, doing an earned income credit, they've actually changed the rules now. In 2011, the tax preparer had to fill out a form. We've actually represented some preparers, and they came out and said, doing this extra form is not enough. We have to determine that you've questioned your client above and beyond this questionnaire and made a determination on your own that they were the correct children and the rest of the questions. And that's, you know, and they'll fine people a lot of money, you know, per return, $500 a return for things like that. So the audit is, I'll give you a great example, employee business expense. The code says that if you are an employee and you have expenses that you legitimately, it's understandable that you would incur. Like, for example, I have police officers, and they have second guns, and they buy ammo, and it's understood that, they're going to have certain costs. What the auditors tell you is that these must be condition of employment, such that if you didn't have these expenditures and pay for them, you could not get this job. So they audit you when they want your employment contract and other contracts that the company you work for has, and they want to see specifically that it's a condition of employment such that if you don't spend this money, then you can't have the job. And if you don't meet that requirement, they're going to disavow the deduction when that's purely not the intention of the code. So they're going overboard now like crazy.
Well, okay, we'll pause briefly and come back and talk some more about our dealings with the Internal Revenue Service, avoiding audits and doing so in the company of a person who has his business helping you survive such government activities. He is a certified public accountant and tax resolution specialist, Joe Mastriano. His website is taxproblem.org. We're at 1-866-50-JIMBO. You got to think about it sooner or later. You might as well think about it now. We've only got, as we speak now, a few hours left till February, so it's time. Back in a moment. Welcome back to the Jim Bohannon Show at 1-866-50-JIMBO, 1-866-505-4626, online at jimbotalk.net. Tax resolution specialist Joe Mastriano is our guest tonight. His website, taxproblem.org, and we're looking at some of the things that you may face as you deal with Uncle Sugar come April 15th. Some years ago, we were told about the kinder, gentler IRS. I guess that didn't last long, huh?
Yeah, so was Al Capone.
But he was never kinder and gentler. For a while, Internal Revenue, I heard, actually backed off a little bit. For a while. Is that not true?
Yeah. Well, no, in 2000, 2001,
yeah.
around there. Yeah.
Exactly. Yeah. So what happened? I mean, it's political. They have internal problems. Like what?
Computers for one thing. They had new computer vendors who failed them over and over. There were cases of letters going out that shouldn't have gone out to people, lost refunds, all kinds of things like that.
So they weren't being unkind. They just had bad computers. Boy, that's a real dog ate my homework kind of excuse.
Well, no, the kinder, gentler was, that's why I mentioned Al Capone, the setups, hey, come on in, we have some benefits for you, and then they nab you. The kinder, gentler was their doublespeak for, okay, well, there was one where they would say that the big joke was they would take off penalties. So they'd say, come to us if you've done wrong, and we'll be kinder and gentler, and we won't penalize you that much. So people thought they were going to get out of penalties. And then they went to the IRS, and they were like, oh, no. We won't hit you up with the fraud penalties, but we're going to hit you with all the late filing penalties, late paying penalties, interest, and everything else we could find.
Okay, so it was you're saying a ploy, as it were.
Yeah.
Something I don't understand, I suppose. It's always nice to see people enthusiastic about their work. But are these people being paid on a commission or something? The more taxpayers you screw, the more money you get. I mean, what's it to them? Why don't they just do their job and stop lying awake at night looking for ways to stick it to people?
Yeah, it's kind of like the Army when they used to Vietnam, when they used to show films of scoops and say that, the Vietnamese were subhuman.
Well, I hate to call you on that, but I was in the Army at that time, and no such thing happened.
Oh, I know people that saw.
Well, maybe you did. They certainly didn't go to Fort Leonard Wood, Missouri in the summer of 1966. I mean, that's urban mythology.
11 men, yeah.
That's urban mythology. 11. But anyway, I'll put it there. Just to put that one down. No, did not
My record's 6 years after that, so I don't know.
Well,
but
not to go too far astray here. Suffice it to say simply that you're saying that the extreme activities here. I mean, they get paid either way. I mean,
no, that stopped. I think in the late 70s or something, like the early 80s or something. No, they don't. But they're told that it's rah-rah for your country. And if you want to serve your country,
Well, I understand there are a lot of people who do cheat on their taxes. I understand that, and I have no problem with those people being nailed. But I guess what I'm wondering about here is what's in it for them? I mean, do they get bonuses? Do they have a quota system? Do they get promotions?
Well,
I'm used to bureaucrats who go through the motions. Of all the people who have to be dedicated, why does it have to be these clowns?
Hey, look, if it's a large political organization. I know a local guy for 25 years, he never moved up. I knew young kids that moved up because they teamed up with the right person. You team up with, and you do the bidding of your manager. If your manager's moving up, you're going to move up.
These are federal employees. I guess I thought that there was a pretty stratified process by which people got promoted. That it was all spelled out in all of these various statutes, and that in fact that kind of favoritism went out with the passage of the Civil Service Act back in the 1880s.
Oh no. They're so they're so with the increase of audits and the need for IRS personnel, they grab people off the street with only high school educations and give them quick training. I've dealt with audit groups where, in fact, locally one of them, where the manager was so new that the auditor was doing the job of the manager and helping him out because he didn't know what to do.
Huge. We have a call from Mary in Florence, Oregon. Good evening, Mary.
Hi, Jim.
Hi.
I'm a retired revenue officer with the IRS, and I cannot believe that this gentleman is on the air with you because he's telling you everything is totally opposite of what's true.
Okay, give us your views, Mary. Go ahead.
Well, you had to have a college education to be a revenue agent or a revenue officer.
Totally not true.
We didn't get commission. No one was ever on commission, and the people that we were dealing with, we were very concerned about what was happening with them. I just can't believe this man has ever really dealt with the IRS.
Well, that's what he does for a living. He deals with the IRS.
He deals with audits.
60s? I know plenty of revenue officers without college educations.
No, you don't.
They're great, and they're great people, and I like them.
Who you know that have been promoted to revenue officers have been internal hires that have been with the service for years and years and years and worked their way up.
I know people who entered the service as revenue officer that didn't get promoted.
Yes, but they didn't enter without having...
Hello?
A college degree, yes.
I guess she hung up. Whatever. Anyway, I didn't cut her off. 1-866-50-JIMBO, 1-866-505-4626 on the Jim Bohannon Show. More to come as we approach tax time in a moment. Welcome back to the Jim Bohannon Show as we continue to talk about taxes. And Mary in Florence, Oregon, former IRS employee, I wanted you to go ahead and have a chance to make your points, and then we'll continue our discussion after that.
Yes, I'm sorry, I got disconnected, Jim.
I understand.
And by the way, I love your show. I listen to you every night.
Thank you.
What I wanted to say is that I think that your guest is being disingenuous as far as what really happens inside the IRS. And we are not, the people in the IRS, I know we've had some rotten apples that may have done things that made other revenue officers look bad, but the rest of us were simply trying to do the job, follow the code. As you mentioned earlier when you were responding to him, we follow the code, and we don't just make it up as we go along. We have to have a reason for what we're looking into and what we're trying to do to get the taxpayer to conform.
I would have to think that if, in fact, you made it up, that you would be liable for some pretty severe penalties, including even incarceration.
Oh, God, yes.
I would have to. Anyway, I can only say that from my own personally experienced my one audit. As I said, it was a pain, but I can't say that it was unreasonable. They admitted they were wrong, which they were, and fine. I have no problem with that. Anything else you wanted to add, and then we'll continue our discussion.
No, it's just that the people shouldn't consider the IRS some ridiculous monolith. It just isn't. We're civil servants. We don't work for profit, and we try to close the cases with the taxpayers in the fairest way possible for all sides, and that's the truth.
All right. Very good. That's Mary's view, and thank you for your call. All right. Joe, we can wrap up your thoughts about Mary and then move on to other topics.
Yeah, let me tell you how not to be audited. I agree with most of what Mary's saying. I know some very good auditors and revenue officers, and they do carry the weight for the service, and they serve an excellent purpose. But, you know, how do you justify the calls I get each week when people tell me I went to the auditor with my CPA and all my receipts and all my invoices, and they're still denying my deductions? You know, that goes on. So, and it's not a couple of isolated instances. So those of you who do not want to be audited, I have a 4-part program. I will tell you quickly.
Let's hear that. Yes, absolutely, because everybody take notes here now. You want to avoid being audited? Listen to an expert, Joe Mastriano. Go ahead.
And I will tell you this. Anyone that's done this in the past, to this day, I don't know one person that's ever been audited. And this isn't something I made up. I know other CPAs that tell this to their clients as well. Okay, first thing you do is you file an extension. You don't file by April 15th. File an automatic extension. The automatic extension now takes you to October 15th. You used to have a second extension with a good reason. Now it's automatic. You file right before the 15th, the 12th, the 13th. And by then, they've selected most of the returns for audit. Now, the IRS is big on their matching program. There's a wage and income transcript that they find, that's your W-2s, 1099s, K-1s from partnerships and sub-S's. It's what the IRS cash transactions, it's what the IRS has on you. They have it usually by the end of August, beginning of September. So you call up, or we do it for you, and you ask them for a copy of the wage and income transcript. They send it to you, or they'll verbally give it to you over the phone. Match every single number they have on your return, because if they can't find those numbers on the return, you will be audited. And a lot of it is correspondence audits, and it's a real audit, so you don't just send the receipts in and back to them and think everything's okay. But match all those numbers. Okay, now the big thing is let me explain the documentation part. If you have, husband, wife, 3 kids, and you only show that your taxable income is $15,000, you need to explain it. You need to say, taxpayer borrowed money from family or whatever. You need to explain on the return what's going on. Auto mileage, travel, entertainment. Taxpayer realizes entertainment and travel might look high in terms of the, gross income. And you say taxpayer, of course it's got to be true, but you say taxpayer has examined the code and the regs and understands the nature of the deduction, and the deduction is prudent and it's ordinary and necessary, and we stand by with all the evidence. And one big thing they look at is third-party payer evidence. And so you say you've got the third-party payer documentation, like auto mileage. You go to a shop in January, they record the mileage. You go to another shop in October, and they record the mileage, and then they guess from that how many miles you drove for the year. They'll take that evidence, but you do your own mileage log, and then they question you like crazy. So if you document the return, anything that's more than just a simple, W-2 only return, and you let them know that you're totally aware of what's on the return, you're totally aware of what the, rules say, then if you happen to be one of the few people that gets selected, after you send the return in right before October 15th, they'll throw it back in and pick someone else that didn't document their return. Most people that come to me that they've been audited, I can usually find something on their return that triggered the audit. So you do these 4 things, the IRS may change, but right now no one who's ever done that has ever been audited that we're aware of.
All right. Dan calls in from Boston tonight. Good evening, Dan.
Good evening. Very good to talk to you. I just want to add some credibility to this gentleman. That woman that just called in that was a former agent is saying that he's totally ridiculous. But I had gone through an audit a few years back, and it is what this gentleman describes. The auditor that was auditing me could not find a particular problem with my return or my books. I was a self-employed operator. And he actually made up things at the end of the audit. He described in the paperwork that me and my wife had so many drinks a week at a restaurant, decided that we went out at so many vacations, which was totally false. And at the end they said, you need to appeal it if you don't like it, or pay the tax.
Well, now, did you have documentation? Did you have receipts?
I did not deduct those. He could not find. These were just made up. I think they were called lifestyle. For my age, my lifestyle, the city that I lived. And he added a tax about $20,000. Said that I was hiding income. And, of course, it went to appeals.
Well, yeah, I guess it would.
And at the appeals level, they were much more professional. And we won the appeal with zero tax owed, and they actually apologized.
Well, now, what happened to the person that stuck you with this? Did anybody come back and come down on him, to your knowledge? I mean, or he'll just do this again?
Follow up on it, sort of. It was such a nightmare that I was sort of just glad it was over.
Yeah.
It cost me a lot, and of course I had a tax attorney to defend me.
Yeah.
But I could not believe it. I thought, like Jimbo said, they have to follow the codes, and this auditor did not. There was no laws. He made up stories because there was a particular situation.
Well, again, no system can prevent somebody from going rogue, but they can certainly come back after the fact and see to it that that's the last time you care to do that, because you will be punished, and you don't know what happened to him. I'll ask our guest, Joe Mastriano. Do they come back? I mean, if I were in charge of the IRS and heard about a person like this on my watch, he'd be hung out to dry.
Well, that's just it. It's more than just a few instances. It's acceptable practice. Now, I know certain managers that would not tolerate it, and I know of other managers that don't even police the people under them, all within the same district.
Isn't that kind of bad for the manager in question? I mean, if I have a bunch of rogues working for me, won't that come back to hurt me? I mean, if these people have any sense of self-preservation, I'm not asking them to be public-spirited or to care about the public welfare. I'm asking them to cover their own butt. And if I happen to manage a bunch of rogues, then I'm in trouble. I don't get the self-preservation part.
Okay, but Jimbo, you know what happens? They break up the group. I know of one case where they just broke up the group. They kept the manager. They put new people under him because it's very, very hard. They've increased their staff in the last few years. There's a freeze now, but they had increased their staff so rapidly that anyone that was willing to do the job, it seems like, they put them in there.
Huh. Well,
I had a guy, he couldn't even speak English, and I've known him for like 15 years. He's a manager now, and we were all in total shock when we found out he was a manager.
Well, more to come. Stay with us. 1-866-50-JIMBO. Back in a moment. This is the Jim Bohannon Show, and we're taking a look at the whole process of auditing. What typically do people bring to you at taxproblem.org, Joe Mastriano? What kind of circumstances do you face from the typical taxpayer?
Ooh, I don't know if there's a typical one, but mostly it's collections, because people call up the IRS and they'll think they're in a payment plan, and they'll say, pay me $500 a month by the 15th, and then they wonder why the IRS levied their bank account or their paycheck. And actually, I'd like to explain that.
Sure.
What the IRS doesn't tell you, and what people from these tax companies that are breaking in new employees that aren't licensed professional CPA or law firms that don't have the experience, is that agreements need a 2-digit status code. And you're not just done, verbally. If they don't codify your agreement in their computer system, anything can happen. And your payments, normally people think, well, they're, if you're postmarked by the due date, if they're doing the 15th, you postmark them by the 15th, you're fine. No, they have a rule that says your payments have to be logged into your account at the IRS by the due date. And that's gotten, me a lot of clients by...
Well,
yeah, okay.
But what's the actual time then? I mean, if the postmark is the 15th, how long does it take them to log in? So what's an actual postmark to be safe? What would be a safe postmark if not the 15th?
The safe thing is the EFTPS.gov. Thank God for computers in this particular instance.
But I mean, is there a date such that since April the 15th for the postmark is not the point?
That April the 15th is for the tax return.
Right.
Right, but that's different. I'm talking about the payments if you're in an installment agreement. As long as the tax return is postmarked by the 15th, you're fine. But there's a different rule. See, when you owe money, that they change the rules for you. And a lot of people don't realize this. So if you have to make, you owe them $20,000, and you say I can only pay $5,000, so you make an installment agreement, and then you think you have to pay your payments by the 15th, but no, they have to be logged into your account. The good thing is they have. Go ahead.
Well, I just want to ask you then if it's not for those payments, then what is the safe time to get it in?
Electronic. Well, no, that's the only safe thing. Normally, we used to tell people send it 10 days early.
10 days, good. So the 5th.
10 days.
So the 5th.
Not anymore. You go online. The electronic federal tax payment system.
Yeah, but if you go online, does that mean just because you sent it on the 15th, does that mean that it is quote logged into their computer? I mean, I don't know if this is instantaneous or not, or do they have to sit down and manually log it in?
No, they honor it. I've never seen a flaw in this system. You get a code number for a backup confirmation code, and I've never had an issue with the IRS not posting those things and charging people. So no, that's a pretty solid system.
All right. So that was only a problem for snail mailing.
Yeah.
Right.
Yeah,
okay.
Exactly.
Gotcha.
Well, and people that don't get to the system on time, because it's not automatic. You have to go online physically and tell them to take the payment out of your bank account. You have to set that up.
Is that? I hope that's not another healthcare.gov. Is it? Is it hard to do?
No. It used to be when they first set it up, but it's a very simple process now.
Well, that's good to hear. All right. Well, there is some good news here.
And the other thing, let me say,
please,
is that, and this is how I get a lot of attorneys as clients, because people are led to believe that a corporation is a separate legal entity. So you do an installment agreement on your personal taxes, and you're running the corporation, and you're late on depositing your payroll taxes, they'll break your personal installment agreement and start levying your accounts. They won't honor the different entity concept in this particular instance. And this is where people go wrong. This is why people come to my firm. I tell them that if we get you a status code and we coach you on what you need to do not to break it, we can actually guarantee that when these things are in place, no collection action can ever happen.
Well, that's good to know. At this stage of the game, you're looking for any safe harbor. More to come in just a moment. Welcome back to the Jim Bohannon Show. Let's say I decide to take on Internal Revenue with the help of a professional like Joe Mastriano at taxproblem.org. What's the batting average? Do you have a winning percentage?
For what? For audits?
Yeah, or audits or any other disagreement with Internal Revenue.
It's close to 1,000 if people have the documentation. The problem is, and we've had a couple of cases now, we've got to tell our client we're kind of afraid to. We know this one woman's going to be extremely upset. We took her away from a large law firm. That we couldn't file an offer in compromise to open up her audit because she didn't have the proper receipts. And again, what people think are receipts. The only time we would feel comfortable winning an audit is when we can prove those things, that it was prudent and that it was ordinary and necessary, and we can prove it was a business expense for things like vehicles and computers and entertainment, as opposed to a personal expense. And that gentleman that called in, I agree with him. They do the analysis. They look at all the. I've had an auditor tell me to my face that, yes, our group is now, when we do audits, we look at all the deposits in your bank account, and if you can't prove all those deposits are not income, we're going to charge it to you as income.
Should one therefore be hyper about saving every scrap of paper that could conceivably be used to defend yourself? Should we have a folder 8 inches thick?
Well, yes and no. Not every paper, but it's important to understand what you need as support. The support really hasn't changed too much. It's how you document the return. You're a sole proprietor, you have auto mileage. Keep a mileage log, okay? Keep your gas receipts, but, within reason. If you can prove you drove the miles and your car gets a certain mileage amount, then it's obvious you spent X number of dollars on gas. The problem is, they don't want to take your word that trip was business as opposed to personal. So you've got to be very sensitive to be able to prove the nature of the transactions and that it's under, the code. It's what it was intended for, such as the employee business expense. Just because you bought some books on the job, thank God for teachers. There's a separate line item on the return now for educators to deduct their expenses. And certain artists, you had to have a profit before you can deduct your expenses, which was totally unfair, and they changed that. So there are changes made in people's, favor like that. But, again, you have to, people need to quit going to these, tax preparation companies and go to a licensed professional, law firm or CPA firm with experience, and they need to pay attention. Don't just sign off on the return and think you're going to blame it on the preparer. People need to understand what the nature of their expenses are and how they fit within the intention of the IRS to deduct it. That's the key. It's the education more than every piece of paper or a document you can put your hands on.
30 seconds to go here. If my preparer makes a mistake, how liable am I?
Well, you're liable because you signed the return on the penalties. But I'll tell you this, the preparer penalties are going up. We represented a couple of preparers before the IRS, and those guys are trying to make us do their job. So that's in favor of the taxpayer because your preparer has to have a lot of documentation.
Fair enough.
Everything anyway.
All right, stay on the line. We'll speak off air. Again, Joe Mastriano, he is a tax resolution specialist. His website is taxproblem.org. Check it out. I'm Jim Bohannon, and this is Westwood One.